So I'll now hand over to John, who will take you through payroll essentials, a UK budget review and what's new for 2020-21. Thank you, John.
Thank you, Anna. Good morning, everyone. We are indeed in unprecedented times at the moment, and certainly times which I have never ever in my career come across before. And as a business, we will obviously weather these storms and come through it like all of us. We have to do with our solutions and with the government as it wills to send us legislation to change, which has been very frequent just lately, as you can probably understand. What we've got on the agenda, so what's new for 2021, and we've already done a few webinars this year, 2 on off payroll working and 1 on the employment allowance changes, but that's not the only ones that are changing for 2021, because indeed there is a change on one of them, which I will tell you very shortly about. And then what's in the budget for payroll, what we're doing in the software as a result of the changes for 2021, and what we now know so far for 21-22. And as Anna has said, obviously we'll look at any questions that you may have to ask us at the end of this presentation. So thank you, Anna. So what's new for 2021 as we knew it prior to the budget? Okay. The first one is just a reminder about the gender pay gap reporting, if you are mandated to do so, that these must be reported for the public sector by the 30th of March and for the private sector by the 4th of April this year. And this is in respect of the snapshot dates which took place, public sector 31st of March 2019 and private sector 5th of April 2019. So you must publicise those results of your gender pay gap on your public website, and also report that on the government website as well. 1st of April, we have the new national minimum wage rates and national living wage rates, which will be coming in. And for the 25s and over, that will increase to £8.72 per hour for the national living wage, and to £8.20 an hour for the national minimum wage for those are 21 to 24. Of course, there are other rates as well, and there's a link at the end of this presentation for the full range of the rates. 6th of April, obviously, of course, start of the tax year, and one of the new items is a statutory parental bereavement leave and pay. Now, this was quite quickly put through Parliament last year, that if an employee should suffer the loss of a child under the age of 18 or a stillbirth after 24 weeks of pregnancy, then that individual will be entitled to 2 weeks leave, that parent rather, will be entitled to 2 weeks leave as a statutory day 1 right. They will also be entitled to pay subject to qualifying criteria, and that qualifying criteria is 26 weeks of employment with that employer prior to the death of the child. Leave and pay is in respect of each child, so if unfortunately 2 children were to die at the same time, say in a car accident or something like that, then leave and pay in respect of each child must be taken within 56 weeks of the child's death. It could be a week at the very start, and it could be a week on the anniversary. That's why they've made it 56 weeks, I guess. But there's certainly, it is in respect of each child. So it's 2 weeks of leave and 2 weeks of pay if there's qualification on the pay side. 1st of April sees an increase in the parental pay, statutory pay rates. That's for statutory maternity, adoption, paternity pay and shared parental pay as well. And also this will include the statutory bereavement leave and pay, which will all go to £151.20 a week. 6th of April sees an increase in the statutory sick pay, which will increase to 95.25, I believe it is. I haven't got a note of it here, but I'm sure it's 95.25 per week that will increase to. Thank you, Anna. The tax situation, 6th of April, you normally expect to see new tax tables, new uplifts for personal allowance codes, and obviously changes, maybe changes in the bandings. Now, we were aware before the budget that there was to be no increase in Welsh tax. That would remain as is. And Scotland did announce a change in their tax bands before the budget on the 6th of February, based on the fact if there was no change to the UK ones. So we did have a change in the Scottish ones, and I will come to that later. But as far as the UK ones, there was no announcement made at that time about any change to UK ones, but as I say, we'll talk about that in the budget announcements. 6th of April also sees changes to the NI thresholds, and these are the LEL will go to £6,240 per annum. The primary threshold will increase to £9,500 per annum, and the secondary threshold will decrease to a lesser amount of £8,788 per annum. Now, please note there that the two thresholds, that's the primary threshold and the secondary threshold, are no longer different. The secondary threshold, which is the employer contribution, starts before that of the employee this time. So it is the secondary threshold is lower than the primary threshold. Workplace pensions reform, because of the increase in the lower earnings level to £6,240 per annum, means that the lower earnings level for workplace pension reform has also increased to £6,240 per annum. No change in the trigger and no change in the maximum either. That is as it is at the moment. Off-payroll working. Now, this has been the hot topic now for many months, and we have received many inquiries from clients about off-payroll working, and indeed we have done 2 webinars on off-payroll working. However, yesterday evening it was announced by the Treasury that this would now be postponed until April 2021. That's not cancellation, it's just a postponement. So they will be pressing ahead with it, but from next year, not this year. So that's the big headline news there. That is hot off the press from yesterday evening. We've also got an increase in student loan thresholds, and type 1 will increase, the earnings threshold will increase to £19,390 per annum, and type 2 will increase to £26,575 per annum from the 6th of April. There is no change in the postgrad loans. They remain as they are. Thank you, Anna. What we also have from the new year is yet another revised starter checklist. This is not yet available on the government website to download. We have seen sight of it. It's just really a reconfiguration of the design of it, really, but nonetheless, it is a revised starter checklist. So that will, as soon as that's available, we'll supply you with the link and let you know by our bi-monthly newsletter. 6th of April will also see changes to company car CO2 emissions. Now, for years now, we've had the one chart which references the NEDC method of calculating the appropriate percentage for company cars. But from the 6th of April, we'll see the introduction of a new chart for worldwide harmonised light vehicle emissions. And this will mean that in existence there will be two charts or two references to be made based upon the date first registered of the vehicle. Now, so if a vehicle is first registered from the 6th of April 2020, that will reference the WLTP chart. And if a vehicle is first registered before the 6th of April, that will reference the NEDC chart. However, both charts are be amended to cater for ultra-low emission cars. That is those between 1 and 50 grams of CO2 per kilometre. And there's a different appropriate percentage to be used there. That's in both charts. Both charts also cater for zero emission cars, totally zero emission cars as well. So that's a very, very significant change, and to encourage obviously the use of electric vehicles there. But we also have our changes to the benefits of cars and vans. So the van benefit charge will uprate from £3,430 to £3,490. The car fuel benefit charge multiplier will uprate from £24,100 to £24,500, and the van fuel benefit charge will uprate from £655 to £666. Employment allowance. Now, we have done a webinar on this previously, and this is also available on our website to listen to. But briefly, this will now only apply to smaller companies or connected companies whose secondary Class 1 NICs combined together in the previous tax year are less than £100,000. There will be no automatic rollover of the allowance from one tax year to the other. That rollover now ceases. Each year will have to be applied for if an employer considers that they are qualified to do so. Employment allowance is now classed as a de minimis state aid, and businesses have to declare their business sector when claiming the employment allowance. And if received any de minimis state aid in the previous 2 years, or indeed expect to receive de minimis state aid in the current year, that state aid cannot go beyond the limits, and each business sector has a limit to the amount of state aid it can receive, and now employment allowance is included within that. Now, before the budget, this was at a maximum of £3,000, and you had to be able to include that maximum £3,000. Whether you claimed it or not is irrelevant, but you had to include that £3,000 in with your de minimis state aid. But that inclusion is not prior to this year. It only starts from this year. So you don't have previous years to include. In the previous 2 years, it only starts from this year. And if you exceed that, you cannot claim the employment allowance. If you're a client of ours and wish to claim the employment allowance, then please contact your payroll specialist. Holiday pay average calculation. Now, this was previously set as being 12 weeks, but due to the Matthew Taylor report on good work, this has now increased to 52 weeks in which work was performed from the 6th of April 2020. Class 1A on termination payments in excess of £30,000 and sporting testimonials in excess of £100,000. Now, where the termination package exceeds £30,000, then the taxable element above this figure is now also subject to employer Class 1A contributions of 13.8%, which will be calculated and sent to HMRC in real time. In other words, when you process the payroll and as part of your FPS, that figure must be sent to HMRC, together with your other PAYE tax and NICs each month. This is different to the Class 1A on benefits in kind that are payrolled. Class 1A on benefits in kind, including P11D, are only paid in July each year. So it's nothing at all to do with those. This is entirely separate. It is Class 1A. It's the same contribution percentage, but it is not dealt with in the same manner. So benefits in kind that attract Class 1A will be as they have been, but you will pay them over in July, whereas for termination payments, those above £30,000 or £100,000 for sporting testimonials, those will need to be paid in real time via the FPS. Now, there was a subtle change to this announced in the employer guide, HMRC's employer bulletin that's sent out every 2 months, that introduced the fact that if an award is made in respect of a termination made prior to the 6th of April 2020, but not paid until after the 6th of April, then these rules will not apply. Now, our software has been changed to reflect the new rules. So if a payment, you are making a payment which is meant to have been paid prior to the 5th of April 2020, then you will need to set up a separate code for that. Thank you, Anna. Sixth of April also sees a change to the amount of a week's pay. Now this is in the Employment Rights Act, and this is to do with like redundancy payments, unfair dismissals and things like that. And this increases to £538 a week for Scotland, England, Scotland and Wales. Northern Ireland, however, does have its own rate, which has not changed as yet for 2020. We haven't received any notification of a change there, but that historically has always been higher than the rest of the UK rates. 6th of April also sees a new requirement that there must be a written statement of employment from day one. Everyone is entitled from the first day they start work to a written statement of employment from their employer. The real living wage, as opposed to the national living wage, which I know sometimes can kind of be confusing here. The real living wage is one which is dealt with by the Living Wage Foundation, as opposed to the national living wage, which is mandatory and is dealt with by the Low Pay Commission. So the real living wage is dealt with separately, and employers can sign up to the real living wage if they wish to do so. And this was announced in November and must be applied by the 1st of May if you're a company that's signed up to the real living wage. But that living wage rate for employees in London is £10.75 an hour, and the rest of the UK is £9.30 an hour. Whereas I must stress, that is if you're signed up to the Living Wage Foundation. If you're not, you must then comply with the mandatory national living wage, national minimum wage rates. Finally, come the 6th of October this year, both men and women will need to be 66 in order to claim state benefit. That's where it equalises out. Both male and female will need to be 66, and thereafter there will be a scale which gradually increases until it gets up to 67. Of course, the age will increase ultimately to 68, but we have no dates as to when that yet will start to apply from. But needless to say, it's now 66 this October. Thank you, Anna. So, what was in the budget? I think the budget was really, you can say, hijacked, if you like, by COVID-19 and the coronavirus. There was a great deal of information that the government released as part of the budget to do with the coronavirus. And the emergency legislation is now in place, such as it is. to confirm that a person who is self-isolating in line with government advice relating to the coronavirus is deemed as being incapable of work with effect from the 13th of March. It would not be payable to only those testing positive for COVID-19 or displaying its symptoms, but also to those individuals advised to self-isolate. And I just quote here, he is isolating himself from other people in such a manner as to prevent infection or contamination with coronavirus disease in accordance with guidance published by Public Health England, NHS National Services Scotland or Public Health Wales, and effective on the 12th of March, it says here, and by reason of that legislation is unable to work. So you don't actually have to have it, but if you're advised that you need to refrain from attending work, then you're entitled to that. And the measure is applicable for a period of 8 months, and the legislation therefore is due to expire in 8 months' time on the 12th of November 2020. Now, in that it didn't say payment from day one of this illness, which I know that the government made an announcement that it would be applicable from day one, but the DWP, the Department of Works and Pensions, have clarified that position. And again, there is links at the end of this presentation, both from the legislation change and from the DWP, which gives more information on payment from day one. But as I say, that information is changing on a daily basis as we speak, and the effect that it is a very fluid situation and a very drastic situation with the measures the government is taking, and no doubt more will be announced over the coming days. What was also announced in the budget was an increase in the employment allowance. Now, I mentioned that there was a £3,000 maximum in the employment allowance, and that was the case before the budget, but now that's increasing to £4,000 in order to help the smaller businesses, but in reality could make it more difficult to claim the employment allowance anyway, because you have to be able to include the maximum figure, the maximum figure is now from the 6th of April £4,000, in with your de minimis state aid maximums. So it's a bit of giving with one hand and taking back with the other, as far as I can see it there. So it seems a bit counterproductive, particularly if you are approaching the limit with your de minimis state aid maximums there. But that's just my opinion. The next thing that was announced was an increase in the lifetime pensions allowance. And the lifetime pension allowance is the maximum amount someone can accrue in a registered pension scheme in a tax efficient manner over their lifetime. And from 6th of April 2020, the pensions lifetime allowance will be £1,073,100. That's up from £1,055,000 this year in 2019-20. So there's been an increase there. The tapered pension allowance. Now this is where the pension's annual allowance is the maximum amount of pension savings with associated tax relief that can be accrued in a year. For individuals on the highest incomes, the annual allowance tapers down from £40,000. The Treasury has reviewed the tapered annual allowance in response to the impact that rules have on the NHS, as well as the public services more generally, and have made some changes accordingly. So from the 6th of April 2020, the adjusted income limit will rise by £90,000 to £240,000. That's up from £150,000. And the threshold income limit will rise in alignment with this by £90,000 to £200,000, increased from £110,000. So that was particularly with regards to doctors and high-paid people like that, who were saying that it has an adverse effect on them. There's this tapering of the annual allowance, so that's been increased now. Now, in the budget, there was no announcement in respect of UK personal allowance or tax thresholds. To a degree, that was to be expected, as in the previous Chancellor, Philip Hammond, who in 2018 announced that when they increased the personal allowance to 12,500 and the higher earnings threshold to £50,000, said there would be no change this year, and that is the case. There is no change for 2020-21. Now, Scottish budget, as I say, was announced and has been agreed by the Scottish Parliament on the 5th of March. So we didn't know until the other day when that would actually be applied, because all current tax thresholds for 2019-20 will carry forward into 2020-21 as at the 6th of April. So even the Scottish ones, which were announced and have been agreed, will not apply at the 6th of April. It will roll over with what they currently are. There is no general tax code uplift, but however, HMRC have confirmed that the Scottish budget, which was agreed on the 5th of March, will be implemented on the 11th of May. So that's an important date. Scottish budget changes, which change the earnings threshold, and I'll just tell you what those are in a second. So the starter rate, 19%, will be for taxable earnings over £12,500 to £14,585. The basic rate of 20% is over £14,586 to £25,158. And the intermediate rate of 21% is over £25,159 to £43,430. The higher rate of 41% over £43,431 to £150,000, and the top rate of 46% above £150,000. So those levels will come into effect on the 11th of May. That's my presentation. Anna, if you next slide. So that's what we knew for 2021 and what was in the budget. Now, we have updated our products to be in line with the known legislation changes prior to the budget. MoPay will be updated to remove the 3 waiting day restrictions on COVID-19 coronavirus-related cases. This is currently being developed and tested as we speak. So we are catering for that. So I know there's been a lot of questions about that. And our product release notes will soon be available to you as well. So we've catered for all the legislation changes, and we are catering for the COVID-19 emergency legislation changes as well. So what do we think we have for 21-22, which is in the next slide? Right, okay. So further changes to company car emissions. So zero emission models will start to pay company car tax at 1%. There will be a national insurance holiday for those employers employing veterans, and transitional arrangements will be in place for 21-22 to cope with that. So that's a holiday of national insurance contributions for employers employing veterans. National living wage rate, it is intended that this will be available to those aged 23 and over. Again, that's in the budget document, and the budget document is accessible from links that are provided in this presentation. From April 2021, both the personal allowance and the higher rate tax threshold will revert to annual increases that are in line with Consumer Price Index, the CPI. So that then says that from next year there will be increases, more than likely, due to the increase in the CPI for your tax, personal allowance and higher rate tax threshold. And finally, as we got to know from last night, off-payroll working in the private sector will come in next year. We need to emphasize that it is next year and not this year now. And I think now over to questions. We have there the various supporting material and the links there, which are on several pages of the slide deck. So thank you, Anna.
Thank you, John. Yes, we've got the links across several slides here. So when you receive a copy of the presentation, you will of course have these links, and we will now move on to your questions. So the first question is, what impact do you think the off-payroll working postponement will have on businesses?
Good question. I would imagine both contractors and businesses to a degree will heave a sigh of relief, and particularly given the current coronavirus situation. It's a hurdle which they don't now need to cope with, along with everything else that is out there at the moment. So certainly they need to be prepared for next year now, not this year. But I do think it's a breathing space that they're being given.
Absolutely.
Which would be most welcome.
Thank you, John. And the next question is, has there been guidance released on the process for Class 1A on termination payments?
Yes, again, those are in the links at the end of the document.
Brilliant, thank you. I'll just see whether we've received any more questions. The only other question was around how will the new Scottish tax bands be calculated?
I've just announced those now, haven't I? So
yeah, I think that question came in earlier. So
right.
Those are all of the questions that we have received this morning. But if you do think of any questions after the webinar that you want to ask, then please do contact John or myself. I will be sending you details of the slides, so you can contact me then, and we can answer your questions if there is anything that comes to mind after you come away from the webinar.
Yeah, and we have. Sorry, Anna, I was going to say that we have left in the links for off-payroll working, because they will still be valid unless they change them for next year now. So we've left those links in there, and we've also got on our website the webinar presentation for the off-payroll working, which of course will say postponed across it at the moment, and also the employment allowance one will also be on our website as well. So that will give you some more guidance regarding that.
Thank you, John. And before we finish, just in terms of how you can connect with MorePay going forward, obviously things are changing very quickly at the moment, as John mentioned, and we are constantly updating our LinkedIn pages with blogs that we're posting on upcoming webinars and also other pieces of supporting content, whether that be guides or blogs. So if you follow us on LinkedIn, then you will see these flash up. There's also our bi-monthly payroll legislation guide, which will be published this month as well, and will of course include a lot of the information that we've gone through today. I hope that you found the webinar this morning useful, and thank you to John for hosting the webinar and for answering your questions. We'll close the webinar now, and I will follow up with the slides and recording as soon as they do become available. Thank you for your time this morning.
Thank you, everyone.